QuickBooks Pro Desktop 2021. Multiple currencies, foreign currency transfer. Let's get into it with Intuit's QuickBooks Pro Desktop 2021. Here we are in our multiple currency practice problem. We currently have the open windows open. You can open the open windows by going to the view dropdown, selecting the open windows list. In prior presentations, we made a purchase of inventory on account, increasing the accounts payable. Not only did we have an increase to the accounts payable, but we were going to pay in foreign currency. We still plan to pay in foreign currency. We haven't yet paid at this point in time. So we had to value it then at the current currency's exchange rate. So we put it on the books at our currency's equivalent value at the point in time that we made the purchase. Then we made another adjustment for the cutoff date, which is a period end adjustment. So our financial statements would be correct at that point in time. Now we're thinking about making the payment on the accounts payable, but we need the money in foreign currency because we're actually going to be paying it in foreign currency. That's where we are at this point. Let's check it out on the balance sheet by going to the reports drop down. Company and financial, we're on the balance sheet standard. Going to change the dates up top in the customized reports from 01/01/21 to 12/31/21 and OK. And then we have down here, we've got our accounts payable. So if I double click on the accounts payable, we made the purchase on this bill on 11/16. So we're going to pay in a foreign currency, the British pounds, and then we recorded it, however, in our exchange rate in the US equivalent, which is 33,000 as of that date. Then we made an adjustment as of the end of the year because we wanted to make it correct as of the point in time that we're going to create the financial statements. Now we're going to actually pay it at another point in time, and we're going to need the money. So I need to know what it's going to be now, today. We're imagining in the practice problem at this current date in the practice problem, so that we can then get the actual money in foreign currency, which we're going to have to do up top because we don't have any money in foreign currency yet. So I'm going to set up another checking account and transfer some money in there in foreign currency, but I need to know how much to transfer. And so that's what we'll do. That's what we'll think about this time. Let's first think about it in terms of a journal entry. So this is what happened at the end of the first year in terms of like a journal entry. So let's imagine what we're going to do is take these ending balance numbers we left off with last time. Those will then be our beginning balance numbers for this time. So in other words, the balance sheet numbers are just pulling forward from the ending balance numbers over here, and the income statement numbers just roll into retained earnings. So here's the income statement stuff, ties out to 128,160. That's going to be our 128,160 right there. Okay, so that's our starting point. And so now we're going to say that we're going to pay off this payable. We need to pay off this payable, but we need to basically adjust it to the current point in time, the current value as of the time we're going to pay it, because we have a different spot rate. Once again, we're going to be paying it on January 15th, and now the spot rate between the British pound and the US dollar is 1.64. So we're going to say, all right, we need to basically adjust this. Pull out the trusty calculator here. Trusty calculator. We're going to be paying then the 20,000 in the foreign currency times the 1.64. So we need it to be at the 32.8 at this point in time. So that means that if I take that minus what we currently have in there, what do we currently have in there? Minus the amount of the 32,600, we need an adjustment of $200 to make this work. So we're going to be adjusting it for the 200. And we're going to have to increase the accounts payable, which is kind of bad because this is in the US equivalent. We're going to have equivalent, so we're going to have to pay it back. So let's think about that just in terms of exchange rates here, right? We had one foreign currency unit could purchase last time 1.63. Now we got one foreign currency unit which is going to be able to purchase 1.64. So that means that we can purchase more US dollars with one foreign currency unit. The foreign currency unit got stronger now than last time we checked, and that's bad for us because we're paying in terms of foreign currency units. So the things we're paying in are now more valuable in relation to or compared to the US dollar. So we're going to then say that we're going to record this transaction. We're going to credit to increase the accounts payable. So we'll increase the accounts payable. The other side is going to be going to the gain or loss. I'm going to go to the gain or loss on the transaction down here. I'm going to calculate this as, I'm going to put it in the debit side. This is going to be equal to, I'm going to put brackets around this. We're going to be taking the difference between the two exchange rates. I'm going to take the larger one minus the smaller one, so it comes out to a positive number, closing the brackets, multiplied times the 20,000. So there's going to be our $200 change that we calculated. And there we have it. Let's post this out. I'm going to go on over here and say, okay, that means the accounts payable needs to be credit. Whoop, that's the wrong accounts payable. The Great British Pound, the British Pound accounts payable. 200 brings it up to the 32.8, which we calculated. That's the right number, so that looks good. And then down here, we're going to say that we have in this case, a loss. So this should actually be a loss. And we're breaking these out. So this should be a loss on the foreign currency. Okay, so there is the 200 on the loss. So notice now we have a 200 on the loss, and we recorded at 800 up top related to this, or up top we recorded 400 on the gain related to this item. So we're kind of splitting out the gains and losses after the cutoff date according to the cutoff dates. So once we have that, then I'm going to record the transfer, taking it out of the cash and putting it into our foreign currency units. We now know how much we need. We need the 32.8. So I'm going to say, all right, cash is going to be going down. Cash is going to go down by the 32.8, which is going to be equal to, I'll say, negative of the 20,000 times the current exchange rate. That's what we need. And there's the debit, and the debit is going to be going into our foreign currency cash in foreign currency units. So we're going to put it on the books at 32,800, even though in that account we're going to have foreign currency units of 20,000 foreign currency units, foreign currency British pounds. So I'm going to say, all right, foreign currency units is going to be equal to the 32.8, and then the cash is then going to be going down. We're going to decrease the cash. So there we have that. Now I'm going to put this into the QuickBooks system. I'm not going to do this first portion because this first portion, we should have that done for us when we do. I'm going to go back on over here, home page. Remember the two points that we have here. We have the enter bill and then pay bill. If we didn't have any cutoff in the middle, the pay bill will actually calculate at that point in time the difference in the exchange rates and allocate it out to the income account. The only time we would need the interim item here is if we had the cutoff, which we did this time. We had the cutoff that we had to deal with, and then we reversed it back out. So this $200 adjustment we have right here, I'm not going to put in place, and it'll take care of itself. We'll still see the same result of 200 after we record the payment take place, and we'll see how that works out with the adjusting entry and the reversing entry, and then the recording of the bill. So that'll all wash out at the end of that, at the end of this, after next presentation. For now, we're just going to record the transfer. So to record the transfer, I'm going to go to the lists drop down. I want to take a look at the currency list. The currency list. Now, if we were doing this as of today, then we would go to the activities. We would say, I want you to get the latest exchange rates. And that would be the rate that we would actually exchange the money for at this date. Now, of course, we're going to have to do it manually because this is a problem we're doing like in the future. So I'm going to double click on the British pound. And I'm going to say today now, according to our problem, in problem days, is 115x2. So I'm going to say 011522. And the exchange rate today in our problem day on January 15th is the exchange rate was the 1.64. So 1.64. So I'm going to say OK. And then I need to transfer some money into a checking account for the foreign currency. So I'm going to see if I have a checking account set up in foreign currency for the pound. So I'm going to go up top and say chart of account, lists chart of accounts. So we have Canadian dollars, we've got yen, we've got US dollars. We don't got the pounds yet. So I'm going to go into the accounts, rise up. We're going to go then to the new account, and we want to see the bank account and continue. And I'm going to put this into a checking account, and and I want it to be for the British pound sterling, which is going to be BP or GPB. Clearly, of course it is, because this is the British pound sterling, so it's going to be GPB. So then I'm going to say save and close. So now we can transfer between the two. So I'm going to do our trusty transfer now by going to the reports dropdown. I'm sorry, banking dropdown. And let's do a transfer funds. Transfer funds as of the date of 01/15/22. And it's going to be going from our checking account, but we want the checking account in US dollars. And then it's going to go to the new one we set up, which is in the GBP. And that's going to be the amount that we want to transfer is going to be 20,000. So if I look at British pound, we could say 20,000 this way. That's the units in British pound sterlings. And then if I was to check it in US dollars, it would be the 32,800 equivalent. So I can use either one with this little toggle going back and forth between the two. And those, of course, are the numbers we want, 20,000. And we currently calculated this one at the 32.8. So the 32.8, that looks good. This is going to transfer, obviously, out of the checking account in dollars and put it into the checking account in the British pounds. And it will do so, recording it even though we're putting physically, or you could think of it physically, 20,000 units of foreign currency units into the account. We're valuing it in US dollar valuation, which is 32.8. So I'm going to say save and close. Yes, and then let's go ahead and take a look at let's take a look at the balance sheet here. And I'll go back up top. We're going to say now, if I refresh this thing, or I need to change the date. We're in 2022 now. So now here we have our GBP account. Double clicking on that. There's our transfer that took place. Let's make this 010122. There's our transfer item there. And of course, it came out of the checking account in US dollars. So let's do that same thing. 010122. And there's our transfer here. So I'm going to close this back out. Now, we haven't adjusted this amount, the accounts payable, as we did in Excel. In Excel, we're going to do this in a two-step process when we actually make the payment. In QuickBooks, I won't do this second step. We'll just make the payment, and it'll record this kind of loss adjustment in one step at that point in time. So we have not done this one. I'll make it kind of like yellow right now, and we'll see how we can do it in QuickBooks without basically doing this step. This is kind of like the step that we did last time and reversed it. And we'll see, we won't do that and reverse it because we did our adjusting entry here. And then we'll see how it pans out when the next step being in our process, we pay the bill. When we pay the bill, 3 accounts then will be affected. We'll be decreasing the accounts payable, decreasing cash. We will then record the gain or loss, which QuickBooks will calculate based on the difference between the two spot rates here. And because we did an adjusting and reversing entry, we should result in the proper gain or loss going to the proper time periods that should match what we did in Excel here, meaning 400 gain in the prior time period and 200 loss in the current year.